Hey, it's Mack with PriceActionTradingSystem.com, and it's Friday, it's September 26th. This will be our chart lesson today, and it was really up until this rally here late in the evening, late afternoon, I should say, not evening, but late afternoon. I mean, this thing really took off up through here. I'm not sure exactly what prompted this, except that the market got a little overdone yesterday, and maybe some people saw some value late on a Friday afternoon going into the weekend. I mean, generally, when you get a rally like this late on a Friday, that means there's a good chance that somebody thinks we're going to be higher next week, or they wouldn't be buying. Either that, or a lot of people that were carrying it short into the weekend decided they didn't want to and are buying it back. That's the only thing you can make of that. I don't know if some kind of news item came out that. Just going to glance over here. I don't think anything's come out. There were some news items earlier in the day, and maybe it just took a little while to digest it. But um, most of that news came out long before this rally started. So, yeah, the GDP and the consumer sentiment, all that came out positive today for the most part, I believe. And I know the housing came out really positive today. So this thing's still going higher. So, but anyway, we don't care why it's happening. Sometimes it's interesting just to see what they say. But generally, something like this is news related. Something came out that somebody liked, or that spooked the market, or made the market, spooked them out of shorts, or into longs, or out of longs into shorts, or whatever. Um, but for the most part, all trading morning, it was choppy and bouncy and stuck in between 1960 and maybe 1967 to 68 is what I would call it. We actually went a little lower and a little higher than what I've got mapped out here with the highs and lows, but you can see where most of your turns occurred. This was your real resistance area, and later, after the regular open, this was pretty much your real support area. This is kind of the midpoint. It's a measured midpoint across there, and actually, you could actually argue this one a tick either way, but I think you get the most touches with support and resistance on either side, right across there, and that's pretty much a measured distance between them two, between those two, between the highs and the lows, in other words. So this is really what we saw. I was a little late getting started this morning. I had some business issues I had to take care of, and I didn't get in here. So there was no midday chart posted on the website if you were looking for that, and I apologize. And there probably will not be a midday chart Monday because I've got some more. I'm probably going to be late getting in here again Monday morning, probably late morning before I get here. I'm going to try to trade for a couple hours when I do come in, but I probably won't be here early enough to get a midday chart out before I'm done for the day. So, but let's talk about the trades. It's Friday, early afternoon. There's a big ball game in town here where I'm at this weekend, so this place is crazy today. And I'd like to get out of here and get home early and beat the traffic, and before it gets worse than it already is, and start my weekend, in other words. So. But let's talk about the trades. The first trade I saw was a short right here. Notice you had a little channel. This looks really rangy. The EMA is just up and down. This was kind of left over from yesterday's afternoon. You can see that it's just the same range. And so you're looking to buy or sell. And we had a little failed breakout. It was tempting to go short right there because you did have this close outside the little channel going up. And you had this little failed second entry short. It went higher, and then it was tempting to go short up there, but I think you got to wait on the second entry like we talked about yesterday. And you can see this is a reversal pattern. It goes right through the EMA, pulls back, and you get this bearish reversal bar. I like that for a short. Looking forward to test these lows. That's exactly where it goes, and it actually breaks a little further. So now you've got your failed breakout the top that reversed. You got your failed breakout the bottom. That is a nice reversal bar that opens down here, trades lower, closes, goes all the way up and closes on its high. An aggressive trader is going to buy that right there. So I've got it marked in green. There was a second entry long there, but I don't like it as much. I went back and forth about whether to make it green. You probably can. I think you want to enter down here where you're way away from the EMA because you know it's going to snap back at some point, and you got a failed break lower out of a trading range. It's 2 days old. Um, but this one's a little more risky than this one, in my opinion. And I know that may sound crazy, but the reason being is that you've got plenty of room to profit here, where you're limited here between getting back to the. But it doesn't matter. It went straight through. It pulls back. You got a failed second entry short there, but it's not a very good setup. Let me make this a little bigger. It's probably hard to see. Um, there's a failed second entry short right here, but I don't like going long there, so you just kind of got to sit. Okay, sorry, I had interrupted. You got to kind of sit tight and wait on that. Wait and see what happens. I just don't like, even though that's a failed second entry short, it's not very bullish, and you got almost 3 bars stacked up, a couple of dojis. Just kind of wait and see what happens. Don't go long, but don't go short. And then suddenly it tries to go short again, and it bounces right off the trend line. So I like that one to the upside. Um, and you could have gotten a scalp out of that and a little more, depending on how you played it. But wait on that. By waiting there, I think you were better off, and you get another bounce off the trend line. So that's like that one. And then now you haven't gotten back to the highs here, really. Actually, I take that back. You are back to the original highs, but I think you got to wait on the second entry, and that doesn't come till here. And notice how it went right back through the EMA again. It pulls back, it tests it. That's your second entry short, and that's bearish enough. It does look like a doji, but that could have ticked. It's just one tick there, and that could have closed either way. Um, you might try a limit order right there, or maybe one tick back in. But if you get too conservative with those limit orders, you'll miss trades. And that was a quick, easy move. That's all you got was a scalp out of it, but it was real quick and easy. And if you jacked around, playing around with it, trying to get a limit order, you may have missed it. And then next thing you know, it's bounced and you missed the trade. Um, I don't think you want to go short in here. You did get a little pull back there and a failed second entry, but it's right back into that previous support area across there, right across here. So I think you got to sit on that one. And you just kind of sit and wait, and it goes higher, and then it pulls back and it bounces at that same spot again. Notice it tried to go lower once, twice, 3 times, and then it tried it twice more. And look at that reversal bar. Just go long right there. That support's acting again by that time. It was really tempting to go long here, and if you had of it would have worked, but you didn't have a close outside of this little trend channel working down, and so it's just really risky going long right there. I just don't think you can risk it. And it is a failed. Notice that new low, first entry short, pullback, second entry short. So it's a failed second entry short as well. So it is a trap, but that's congestion. And and really the reason the congestion is forming is because there's a strong support there. So you might have looked at that as kind of a risky place to go long, or I shouldn't say risky, but an aggressive, because it is a little more risky. So if you saw that and took it, I think that was a great read on it, if that's the reason you took it. But I still think you were better off to wait here, and it was a little aggressive because this could fail real easily. But if you saw those reasons as to why the congestion was forming and why it bounced there, then I think that's some pretty good reading, and pat yourself on the back, because that's what happens. People are looking for shorts here. They don't know that's there, and they're expecting prices to go lower, and they're wondering, why is it bouncing? Why is it hung up right here? There's reasons that this stuff happens. So, okay, I'm sorry I got interrupted there. But anyway, hopefully that makes sense to you right there. If you saw that for the reasons I just stated and took it, that's a great read. But if you took it because you thought it might bounce, then bad trade. So that's the only way I know how to describe it. But when it bounced here again, I liked it to the long side. Just jump in there and go with it. Um, then you got a failed breakout up here. Again, it's tempting to go short right there. Um, but this is a strong move up, and you probably want to wait on something a little more concrete. But look how far away from the EM. You know what? I'm gonna go ahead and make it green. There's a lot of reasons to like that trade. So if you took it, it's a little bit aggressive. So I'm going to mark it green, but that's, look how far away it is from the EMA again. And it actually tried to tick higher right there. And if it would have turned down, I would have liked maybe hitting it for a second entry there. But look, again, it goes right through. It pulls back, but you don't get a very good setup bar, and it's just a second entry. So I think you're better off to wait, and it ends up being a little congestion area. And what usually happens when you break out, it goes lower and it reverses, and that's right off that midline. So I like that for an aggressive long. You don't know that it's going to go way back up here, but I figure you're going to get a scalp out of this at the minimum, but it goes back up. And the reason that I like it there is that was the resistance, kind of the midpoint across there, and it bounces right there. After that, you trap some shorts with that bearish bar right there. And there's actually a shorter term trend line right here too, that if you draw it, you can see there was a break and a new low. And so that's another reason I kind of liked taking a chance, a little bit more aggressive entry for a bounce there. And it could have bounced and gone completely higher, but it doesn't. It comes back down. There's a second entry short there. Again, it's a little bit lower low, but I don't like that doji. I think you're better off to wait, and you just don't get another entry. And you do get a second entry there, but I was a little leery of that one because it's not back to the trend line, at least the way I had it drawn. And but then when you get that failed second entry long right there, I like going short, figuring it's going to break on through and go the other side. It doesn't go the other side, but it does give you a scalp. And of course, it bounces again. And then here's a nice second entry. This one, don't go on that first entry weight. It pulls back. It goes higher first and turns and closes on its very low. I like that, entering right below that. What I really like there is that's so bearish that you probably don't want to risk. You got to be careful with a limit order. But what it did, let me explain this. It closed on one side and opened on the other. Notice how it didn't fill the gap. So you probably wouldn't have got filled there with a limit order until it backed up. But once it backed up, if you didn't get filled here and it backs up and when it turns back down, now you got a failed second entry long. And it's right off the original trend line. I liked going short right there. So if you entered here, you could have added on here. And if you didn't enter here, definitely enter here. So those are two pretty good setups. I like those. Too close to the lows down here to be entering on this one or this one. And it does bounce. And see, you notice how this bar is not a real good, nice reversal bar like this one or even this one. Your strong bar doesn't come till here, and then it backs up again. And so you didn't get a second entry long till right here. But now you've had your break of this bigger channel, leg down, a couple legs down to a new low, and then one more little push that traps people. And then it gets above the EMA, pulls back, and look at that reversal bar. It trades, it moves and goes out the low side and goes back up and goes back out the top side. Again, it closes on one and opens on the other. So you may not get filled there on anything but a stop. And so what I do when it does that, if I'm afraid it would go without me, I'll drop a limit order where I would have put the stop and hope it does tick back after it goes higher. But you might try, usually it will fill that pretty quickly. So you might just wait there with your limit order, and when it comes back, you get filled and look at it take off again. In fact, you could have gotten filled all the way back, probably at least 2 ticks into that bar. But you got to be really good at the price action to be able to sit there and watch that back up and come all the way back. And so you got to know what you're doing, and you got to have some experience at watching it. But look, that's the first break of the EMA, so you're going to probably get a retest of this high, and you're probably going to retest this high. And that's exactly where it goes. So I like to go and notice that new high, pull back first entry, pull back second entry, and that's 2 legs down. So that's a little 2-legged pullback to the EMA, to the midpoint of the range. So just go long right there, or add on if you're still in this trade. And then I didn't mark anything after that. It's 12:30. I don't think you want to go long right there. Unfortunately, it turned out to be a wonderful trade, but I don't think you can go long right there. There's actually a failed second entry short there. Notice that new low. first entry pullback. But man, I don't think I would dare risk going long there at 1 o'clock, after 1 o'clock in the afternoon on a Friday, because it could do you just like going long right there, and then it turns down. Of course, we could still go higher here, but looking at that, I'd hate to know I was long sitting in this right now, because there's a good chance it's coming back. We're overdue to come back to the EMA. So it doesn't mean it won't go back up a little higher and give you a chance to even get out. It doesn't mean you won't get another leg up at all. But the odds are not there with you on that setup. So, but that's what I saw today. There were some pretty good trades, but on days like this, you just got to kind of sit, and sometimes you don't take the second entries. You just wait and see if you can find one that will fail at the right spot and give you an entry in the other direction like this. There was a second entry long there, and I guarantee you a lot of people saw this big move right through the EMA, and then they see that second entry long, and all they're thinking, hey, there's one leg up, and so now I get a chance for a second entry long, but they don't understand that this is a high of a range, and you got a little channel working down, and that's the first break, and so the rules tell us you're going to probably go to the other side of the range. You're probably going to make a new low after the break of the trend channel, and so you got to understand this and follow the rules. And a lot of times on choppy days like this, I generally like range days because they're so predictable. But I'm going to tell you, the range days that we've had lately, the range days we've had recently are not so predictable. They're a little bit more difficult, because usually what you can count on is once you touch the low side, the high side, you're moving to the low side. And then once you touch the low side, you're moving to the high side. Just like this is what you would expect. This is very predictable, obvious price action, because you just came off the low, you headed back, you went through the midline, you come back, you test it, and then you go to the high, and it starts to turn down. And now it did break out, but look, instead of going back to the other side, it breaks out, and look at this big, huge rally. But they're probably hitting stops up through there all the way from all the people that got short the last couple of days. Here it did exactly what you thought. It came down, it tested the low, and it went to the high. But generally what you're going to expect after a couple of moves, you expect it from here, maybe even from here, but definitely from here to probably try to test the lows. It couldn't do it. Then it tries to test the lows again. It still can't do it, but it's getting through the midline, and it hits the high side. And so now you've retested this twice, and then it finally goes down and touches the low. So it's just not typical price action. So you just got to be really, really careful, because it may not act like you generally expect it to act. And if you look at yesterday afternoon, you'd come off the high, you'd go the low. You'd come off the low, you'd go the high. You come off the high, you go the low. You come off the low, you go. That's what you expect on a range day. That's very typical range price action across there. Of course, the bias was down, so you definitely want to take all the shorts, but you could have traded these longs. There's some nice reversal bars on the longs if you really wanted to. It's late in the afternoon. I don't recommend it, but you could have done it. Same thing here. This is another little range. And this is a typical range. It comes off the low, goes to the high. Comes off the high, goes to the low. Comes off the low, goes to the high. Comes off the high, it goes to the low. Comes off the low, it goes. That's very predictable. That's what you expect to happen until finally it fails and goes lower. But we traded down into this, so you expect when we finally continue out successfully, we'll probably go lower. Not 100%, but most of the time that's the bias, so that's what's going to happen. And so I hope that makes sense. And but this, and then we've had some other days that are more similar to today, where the range, just like right in here, it's rangy, but it's not your typical high to low, high to low, high to low. It's very, very predictable. So I hope that makes sense to you, what I was trying to get across. And that's about it for today. I'm going to wrap it up and go start my weekend. Hope you had a great trading week. We'll be back to do it again next week. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.